You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Monday, 11th day of March, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the trading day. We do 2 every trading day. Now, the first one is private. That's for members only and those who are taking our 1-week free trial. If you haven't taken the trial, you can do so by going to mytradingiq.com. And at the very top of the page, there's a link that says 5-day free trial, no credit card required. So you click the link, you fill out the registration form, take a moment, make sure you get it correct because it's an automated process. And if you don't fill it out right, we won't get it. And then we won't know that you want to take the trial. You'll think we've shined you on because we don't like you or we're just too busy, which isn't the case. So take a minute, get it right, and then what will happen, in most cases, same day, we will get your desktop set up, get your indicators indicating for you on TradingView or DT Pro or Ninja, whatever platform you use, and then the following day, that's when your trial 5 days will actually begin. Now, if you're clever, you're already thinking, well, shoot, today's Monday. If I don't get set up till tomorrow, or it doesn't start till tomorrow, I'm only going to get 4 days. Not true. You get 5 consecutive trading days, even if it stretches over a weekend. So don't worry about what day of the week or weekend or hour of the day that you sign up for the trial. Once we've got you all set up and ready to go, then you're going to get 5 consecutive days, even if it stretches over a weekend. Okay? So, what happens when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break, and then we come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, back to the trial for just a moment. When you take the trial, you don't have just access to the live training room each day for 2 hours. You actually have unfettered access to every resource that our lifetime members have access to, with only one exception, and that's the members only workshop on Thursday night. Got access to the Telegram channels, the discussion group, the logic alerts, the concierge trade alerts, everything we offer, except the members only workshop. That makes sense, right? Okay. Now, when the live training room ends each day and we take that 30-minute break and come back for this afternoon broadcast, this is a little bit different. There's a couple of different ways to join the afternoon broadcast live. Best way, you only have to do this once. Go to mytradingiq.com and scroll down where it says afternoon broadcast. Click that link. There you'll get a 30-second registration form. And you're done. Never have to do it again. What will happen going forward is every trading day, About an hour before this broadcast starts, you'll get an email. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and you'll automatically be logged into our platform. The benefit there is you have access to the question box. That way you can ask questions and participate in the discussion. Of course, there'll be days that you're out of the office, away from the desktop, but you'd still like to join live. You can. And there'll be days when you're busy and you can't join live, but you want to get caught up later. You can do that too. I'm talking, of course, about our YouTube channel. It's really easy to remember. YouTube.com, you already know that part, /CFRN. Really? That's all you need to remember. CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, we're simulcasting on our platform and on our YouTube channel. Not only do we broadcast live every trading day, but we also archive each and every daily broadcast. Currently, there are over 2,400 daily episodes archived for your educational and viewing pleasure. If you are new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 weeks, 6 months, a year, 3 years, even more. Just pick some days at random. Listen in a little bit. Fast forward, listen in a little bit. Switch to another day, listen in a little bit. You'll discover the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast and our very vibrant trading community. YouTube.com/CFRN. We'll open today with our daily devotional and a word of prayer, as we do every day. And then we'll get into the markets, and then about 12:45, 45 minutes into the broadcast, Michael will join us and give us a recap of everything that happened in the live training room this morning. Then we'll go live on the TradingView platform for a half an hour, do some live trading, and then we'll wrap things up with our good word for the day. Now, the topic of our devotion, which we began last week and it's continuing into this week, giving it all away and getting it all back again. That sounds pretty good. Our scripture today is short, so pay attention. It's Genesis 2, chapter 2, verse 15. God took the man and set him down in the Garden of Eden to work the ground and keep it in order. Again, that's Genesis 2, verse 15, and that was the Message translation. So last week we talked a lot about giving, which once you understand the joy of giving, you just can't give enough. This week we're going to, or at least today, we're going to begin talking about the legacy of work. It was referenced in that scripture we just shared. The will of God for you and me, and your kids and my kids, and their kids and their kids, is clearly stated in Ecclesiastes 9:10, Whatever your hands find to do, do it with all your might. Whatever work we find ourselves doing in this life, I don't care if it's flipping burgers, we are called to do it well and to the glory of God. The Bible tells us that promotion comes from God, not from human bosses. If you're not doing your best at flipping burgers as you wait for something better, I doubt you'll ever find your dreams. We dare not cheat our children out of the experience of work. We must expect that they give it their full energy. We cannot let our personal or corporate reserves undermine this crucial lesson. What might God want to do through the life and talents of your child or your grandchild? You probably won't know if you short-circuit their experience in working. And I think we all probably know somebody who has a 40-year-old son, or maybe even a daughter, who's never worked a day in their life, living in the basement, playing video games all hours of the night, ordering pizza, and they haven't changed their t-shirt in a week. You know somebody like that? Well, guess what? It's not biblical. I know the feeling of guilt that comes over us when we watch our children struggling financially, our adult children. It's hard not to jump in and ease the pain. If we do, though, we will stunt their development. The wealth we create is like a bonfire. If controlled, it can warm our families. If allowed to spread wildly, it can devastate. This is what's happening all too often within wealthy families around the world these days. God didn't put any of us on this earth merely to sit on a yacht. He put us here to tend the garden He assigned to us. If we want to impart a legacy of generosity, then we must never forget the value of work and its effect on our lives. Something to ponder. Consider the power of work in your life and in the greater culture. What does work produce in a person? How does it shape who a person becomes? We'll continue with this topic tomorrow. Join me now in a word of prayer. Heavenly Father, we come before you today, mindful of your command in Genesis 2 to care for and cultivate the earth. You entrusted us with the responsibility to steward your creation, wisdom, and diligence. Grant us, Lord, the wisdom to recognize the significance of our role as stewards of the environment. Help us to approach our daily lives with reverence and respect for your creation, seeking to preserve and protect it for future generations. May we be mindful of the impact of our decisions and actions on the world around us. Guide us in finding sustainable and responsible ways to care for your creation, honoring your design, and promoting the well-being of all living beings. And Lord, as we go about our daily tasks, may your presence be evident in our actions Help us to embody your love and care for all that you have made, reflecting your character to those around us. And thank you, Lord, for the privilege of participating in your work of stewardship. May we faithfully fulfill this calling, bringing glory to your name in all that we do. It's in Jesus' name we believe and pray. And everybody said, amen. Amen. Happy Monday. It's like an oxymoron, huh? I think I said that last Monday. Oh well. It works. It's true. Everybody understands it. Hey, but if there weren't Mondays, you couldn't get to Friday, right? Okay. So, we will take this day the Lord has made, even though it's called Monday. We will rejoice and be glad in it. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. The Dow is down 49 points. The NASDAQ is down 35. S&P 500 down 10. The Russell 2000 down 13. No movers, no shakers, pretty quiet. In the commodity basket, crude oil up 9 cents, trading 78.10 last. Gold up $4.70, trading 21.90.30 last. Silver up 18 cents, trading 24.73 last. In the Asian markets at the close, the Nikkei down 868 points. That's well over 2%. The Shanghai gained 22 points. The Hang Seng rose 234 points, which is almost 1.5%. And in the European markets at the close, FTSE down just over a point. The DAX down 90 points. The CAC down 16. So that gave us a mixed day in Asia. It was a red day for the UK, a quiet red day. And so far, it's a quiet red Radio Monday here in the US of A. So let's take a look at Logic 247. That's our 24/7 around the clock E-mini alert service. We are in week 293. 293 weeks. Over 16,200 individual handcrafted alerts. We've averaged on a weekly basis 20% or less of the alerts being stopped out on a weekly basis based on market structure. A very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Last week we finished the week out with 11% stopped out. This week we're off to a bumpy start, and it's usually pretty bumpy when we have rollover. And while it's not official rollover yet, we chose to go ahead and roll forward last night. The last time we rolled over, I think it was a Tuesday, which was the first time I saw a rollover Tuesday since 2005. It's just kind of weird the way it worked out. See, they have official rollover day, but we rarely roll on that official rollover day. We wait for the volume in the new contract, which in this case is the June contract. We wait for that volume to exceed the previous contract volume, which is usually on a Friday. It has been year after year after year after year, ever since we began back in 2005. But something in the mix has changed. So I just went ahead and did the deal last week. And I think I saw Michael rolling them forward this morning in the live training room as well. There's sufficient volume to trade either the H contract or the M, which is the new contract, the June contract. So rollover week in itself always causes some issues in the market. We also have some other issues that we've talked about ad nauseum over the past few weeks, from the presidential election cycle to all the stuff happening on Capitol Hill, at our border, at the Ukrainian border. I won't go over it all again because we've covered it all, and as far as I know, there's really nothing new to say about any of it. So back to the bumpy start. I only put out 7 alerts last night in Logic 247. When Valerie did the recap this morning at 6:30 a.m. Eastern, we were still waiting on the outcome of 1. Gave us 6 actionable alerts, of which 2, or 33%, would have been stopped out. Again, based on market structure and that very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. The average over the last 293 weeks on a weekly basis has been 20% or less. So we've still got all of today and the rest of the week before we arrive at the final number for this week. Again, last week it was 11%. That was the final recap that Valerie posted. Now, the logic alerts are based on current price action. They can come out anytime around the clock, 2 a.m., 2 p.m. Futures trade around the clock, and we have traders around the globe. Our day session is their night session, and vice versa. Now, even though the logic alerts are based on current price action, there is time built in to each and every alert for you to first receive the alert, then go to your 30-minute chart and see the window of opportunity that the alert represents. And then you exercise patience, and as price approaches that window of opportunity, you then use your range chart and everything you learn in the live trading room each and every day to execute the trade with surgical precision. Remember, the alerts are designed to help you become self-sufficient. Our goal is for you to become self-sufficient. Hopefully, your goal is for you to become self-sufficient. If your goal is to trade for a living, as long as you're waiting on somebody else to tell you when to get in and when to get out, that's not going to happen. You need to learn to read the chart, understand what it's telling you, and in that process, you actually learn how to trade. That's a very important life skill. Once you learn it, nobody can ever take that away from you. And we're not just teaching you how to trade a specific instrument. We're teaching you something far more important. Teaching you how to trade, period. Once you learn how to trade, you can trade anything, anywhere, anytime. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. Now, there's going to be people that will tell you, well, you can't trade the S&P the same way you trade gold or crude or stocks or Forex or ETFs because they have different personalities. Well, we're not looking for a date. We're looking for a high probability, low risk trade setup. And price does flow the same across all markets and all time frames. Support to resistance and back again. It's a never-ending cycle. It's been in place since the inception of the markets. It will remain in place until the markets cease to exist. Why? Because that's how markets work. Why don't other people tell you that? Because they got a million different courses to sell you and 100,000 different indicator bundles, indicators, oscillators, and holy grails, and algorithms, and all kinds of stuff. We just want to teach how to trade so you don't have to fall victim to any of that stuff ever again. We've all done it. We've all wasted more time and treasure than we care to admit on foolishness. The time has come to put a stop to that and simply learn how to trade. The market does the exact same thing every single day in a slightly different way. Whether it's a fast day, a slow day, an up day, a down day, cloudy day, a rainy day, or a sunny day, we trade everything exactly the same. Every market, every instrument. Makes things pretty simple. It allows you to actually learn how to trade. So, there's our less than stellar start to the week on Logic 247. Oh. Jack, I just saw your message. Well, good for you. At least you did well. He's referring to Mr. Anyway, we'll talk about that later in the broadcast. Now, long before Logic 247, and again, we're in week 293 of Logic 247. Long before we had Logic 247, we had our original alert service, Concierge Trade Alerts. Now, they're a little bit different in a couple of different ways. With the logic alerts, you have an entry price, you have an initial target, which is designed to help you get your goal for the day. And then as I look left and spot potential obstacles to the trade, you may have 2, 3, 4, 5, even more targets, and then a final trade to target. If the logic alert is a short alert, the final trade to target will be the weekly trading zone below. If it's a long alert, the final trade to target will be the weekly trading zone above. Again, the alerts are not designed for you to just trade them and not worry about learning how to trade. I mean, although I know some people do that, you do yourself a great disservice by not seizing the opportunity to actually learn how to trade yourself. And you can create your own trade alerts. The CTAs don't come out around the clock. They're posted as a static report shortly after the Globex open. Last night, 6:10 p.m. Eastern. Actually, 6:11. Now, see, this is Pacific Coast time. I'm in Phoenix. We don't do daylight savings time. So 8 months out of the year, we're on Pacific time. 4 months out of the year, we're on Mountain Standard Time. We're one of the few states. I think there might be one other state that doesn't do daylight savings time. And when we go to the charts, I'm going to show you, if you're not on the East Coast, if you want your charts to be based on East Coast time, the way mine are, I'll show you how to do it. It's real simple. Okay. So if I forget, you can remind me. All right. So last night, 10 minutes after the open, out come the CTAs. All the same markets we cover with logic. So what do you do with them when they're posted? Now notice, these don't have your entry point. These don't have your initial target, okay, like the logic alerts do. It's like a stepping stone. You're stepping up your game. You're getting closer and closer to becoming self-sufficient. With the CTAs, you learn to look left yourself. Spot previous swing highs and swing lows that can become obstacles. They can become current support or resistance to what you're trading right now. People often ask, well, how far back do I have to look? As far as you need to. The only time that doesn't apply is when you've put in a new all-time historic high. You have to handle that a little bit differently. First thing you do when this report is published is go to your 30-minute chart of the markets you trade. Make a note of where price is on your 30-minute chart at the time the report comes out. It's always going to be between these two numbers. Then draw a line in the sand at the long target, draw a line in the sand at the short target. Those will serve as great visual cues, keep you on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. That's pretty simple. Now, the BBC stands for bull, bear, cross. When price crosses above the BBC, it's trying to get to the long target. When price crosses below the BBC, then price is trying to get to the short target. BBC simply stands for bull, bear, cross. Price crosses above it, we're bullish, anticipating higher prices. Price crosses below it, we're bearish, anticipating lower prices relative to whatever time frame you're looking at. When we go to the charts, the green line that you see on my daily chart and on my 30-minute charts, that is the BBC. Bullish above it, bearish below it. Now, with the CTAs, again, you get to look left at yourself because you're learning how to trade. You're learning how to read a chart. And you're going to learn how price behaves at a weekly trading zone. That's really important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BBC, it's trying to get to the zone above. Price is below the 30-minute BBC, it's trying to get to the zone below. We've published the zones every week for our members since December 14th of 2009. It's a long time. 15 years, almost, this December. Yeah. You know what's changed? Nothing. Absolutely nothing. They come out Monday morning at 6:15 a.m. Eastern so that our members and trial members have an opportunity to get the zones on their chart before Wall Street even wakes up for the week. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. They are carved in stone. Beyond that, resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. And on the weekly trading zones, only one of three things happens when price encounters a weekly zone. 70% of the time will be consolidation, 20% of the time rejection, 10% of the time what we call the slice. Now the zones that you'll see on my charts today are last week's zones, because the alerts that go out on Sunday night in Logic 247 and the CTAs are based on the previous week's weekly trading zones. This afternoon, I'll update my charts, and on tomorrow's broadcast, you'll see this week's weekly trading zones. So let's go to the daily chart. Now, why would we go to a daily chart? Nobody trades a daily chart, right? Well, actually, some people do. Institutional traders, the traders who actually move price because of their account size, they look at daily, weekly, and monthly charts the way you and I might look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it has to do with account size. They can stay in a profitable position far longer than you or I might be comfortable with, and they can withstand a much deeper drawdown than you or I would be comfortable with. So no matter what you trade, it could be the ES, it could be another futures market, it could be an individual stock, crypto, Forex, ETF. If you learn to spend just 2 minutes with the daily chart before you begin your trading session, you're literally looking over the shoulder of the institutional traders who actually move price. Our strategy and our indicators are not designed to outsmart the institutions with their infinite resources, but to help you clearly see what the institutional traders are doing so that you can do the same thing just long enough to get your goal for the day and then have the discipline to put the mouse away. The green line, that's the BBC. Last time we crossed it, November 2nd. The following day, we opened and closed above it. We've been in an uptrend ever since. We had been in a downtrend quite some time. So November 2nd, we crossed the BBC. We confirmed it the following day by opening and closing above the BBC. And it's been leg retracement, 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 new all-time historic high right there. Put in on March 8th, 52.57 1/4. Now price has fell to the step line and the 62% fib extension, which is currently providing support. We talked about, you see today's low is 51.57. On Friday, we talked about the importance of the low from last Thursday, 51.48.75. Notice the BBC is at 51.33. Price always reverts to the mean. In our case, the mean is green, and we call it the BBC. Bearish below it, bullish above it. Bull bear cross. And you'll notice the pullback holes whether it's pulling from below or above. Pullback holds more often than it doesn't. But we know eventually it will trade through. The last time it traded through and held was November 2nd, and the confirmation came on November 3rd. Now, trees don't grow to the sky, and neither do markets. So not only are we due for a pullback to the VVC, but we're also due for a pullback that trades through the VVC. Will it be this one? Don't know. Don't have crystal balls. As you can see, all of these pullbacks held. Okay. Now, we had a red candle all the way down to here. 51.57. 51.48 was last Thursday's low. This was Friday where we put in the new all-time historic high. So with blue and climbing now directly above price, that becomes resistance. The step line is potential support. The 62% fib is potential support. And then the BBC should be good for a bounce. But this could be the time that we trade through. Here's the 24% fib retracement. Don't confuse those with the extensions. Fibonacci retracements show you where to expect support in a falling market. Extensions show you where to expect resistance in a rising market. But once price gets above that 62, pulling back, it's potential support. This is the 100% fib extension of this entire leg up, which began October 27th. Stepan is using just this leg on his charts. You'll see those in the discussion group. From this low to this high to this retracement low. Since he's doing it that way, I'm just going to keep mine for now where it is. So I want to see if this pullback is going to hold. Okay. Where do I think price is ultimately going? In the medium to short term, I think we'll see a 50% retracement, which puts us back around 47.37. But again, that's an observation, not a forecast. So whatever market you trade, spend 2 minutes with the daily chart, identify major areas of resistance, support, drop to your 30-minute chart, the roadmap, so that you get a close-up view of what's happening. You can see your weekly trading zones, and then execute on your range chart as you're taught every trading day in the live training room. The vertical lines here separate today, Monday, which began last night at 6 p.m. Eastern. Those coming from the world of equities are used to the week starting Monday morning at 9:30 a.m. Eastern. But for us futures traders, we know that futures trade around the clock, and the beginning of the session, like tonight at 6 p.m. Eastern, that will be the beginning of the Tuesday session. Stocks will stop today at 4. That will be the end of the Monday session. Futures will stop today at 5 Eastern. That will be the end of the Monday session for futures. Markets will go quiet for an hour and then reopen at 6 p.m. Eastern. So this was Friday, this was Thursday, this was Wednesday. Now remember, these are last week's zones because the alerts that go out Sunday night are based on the previous week's zones because the new zones don't come out till Monday morning at 6:15 a.m. Eastern. When price drops to a zone, we expect support. 51.58/59 was this zone. When price rises to a zone, we expect resistance. Resistance will always send the market looking for support. Support will always send the market looking for resistance. That's rejection 20% of the time. That's consolidation 70% of the time. So we had a nice, big, beautiful leg and a retracement to the BBC and the pullback held. That was last Thursday. Here's what happened on Friday. Where did the market find support? At the zone. And it got rejected. The market finds rejection, it will go look for support. Pull up to the BBC or the pull down. The pullback holds more often than not. So this was the opening candle last night. We spent most of the night consolidating along this weekly trading zone, which was published last Monday morning at 6:15 a.m. Eastern. And then we finally got a move that took us down to the target. Now, Monday, Friday, Thursday. Thursday, we had a bullish cross. The blue line got above the green line that led to an extended move. What we know is that when that happens, first time price revisits that area where the bullish cross happened will almost always be good support. And it was. When the market found the support created by the bullish cross, it went looking for resistance, which it found at the BBC. When the market finds resistance, it's going to go look for support, which it found at the weekly trading zone. When the market finds support, it's going to go look for resistance, which it has found at the BBC. Now it's creeping up a little bit, okay? But we're only 18 minutes into the life of this candle, or 18 minutes into the life of the candle, so we got 12 minutes left. It's where this candle closes that's important. Notice red and falling has turned blue and climbing. Right here. It's called the CFMA1. I refer to it as blue and climbing, bullish, red and falling, bearish. Now that's changed. We've got potential resistance here, here, here. And then we got a real nice window of opportunity from about 50.26 up to 52.18. Then we have a bullish cross at 52.22. Is that you, Michael?
That is me.
Okay, guys, we're going to pause here. We will cover the rest of these markets after Michael gives us a recap of the live training room. Then we'll go live on the TradingView platform for 30 minutes. And then we'll complete the recap we were just doing and wrap things up with our good word for the day. Looks good.
All right. Here we go. Good afternoon, everyone. Today is Monday, the 11th day of March, 2024. Now, if you have not taken a free trial with us and you want to, go here to mytradingview.com, click on the purple button right here. It says start your free 5-day trial, 9:15 to 11:30 Eastern time. When you click on that, there's no credit card required. It's going to bring you to this page, this registration page right here. Just fill it out. Give us your email, your phone number, your name. Down here at the bottom, if you have NinjaTrader, you can give us your machine ID. If you have TradingView, you can give us, I just noticed that I'll put that back in. If you have TradingView, give us your TradingView login ID. Click join webinar. Okay, when you do that, you'll be sent all the information you need to get into the room in the morning. But if you give us these IDs, if you have those IDs and you give us those IDs, we'll be able to enable your indicators for you. All right. So today, Monday, we had a pretty good day today. Didn't end at the high of the day, but we ended pretty close to it. Now, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down the bottom. Today, as I said, it's the 11th day of March 2024. We made 55 ticks on the NQ, 19 ticks on the Russell, 10 ticks on crude, and 2 ticks on the ES. That put us at plus 495 on the morning session. Today, it took 13 minutes and 1 trade to get to the goal for the day. At that point, we're up $2,135 with 15 contracts. Now, we took a total of 20 trades this morning, and that puts us at $3,147 over 7 trading days, averaging $449 per contract per 2-hour trading day. On the year, we're at $18,555, again with 1 contract. That's over 48 days, averaging $386 per contract per 2-hour trading day. So far on a monthly basis, we're just about 2.5 months in. So if you divide that by 2.5, it comes out to about $7,000, averaging about $7,000 a month per contract right now, which is pretty good. Take that in, yay. Now, not bad for 2 hours a day, really. Excuse me. If you were to quit trading when you get your goal for the day and you're at 1 contract per month, which we did starting last year in January, we're now up to our 15th month using that method. So far this year, you would have only had to work 19.5 hours getting your goal. 19.5 hours getting your goal, and you would have averaged $4,796 per hour so far. That is starting out with 13 contracts, adding 1 in February, adding another 1 in March. That's why we're at 15 now. $4,796 per hour is what you would have averaged, just quitting when you get your goal. All right, now we traded all the markets today. On the crude oil, I think we had just a couple of trades. We had 1 break even right there and 1 plus 10 over here. That was it. We had a plus 10 right there, and then we had a break even trade on this one. During the break, there were no blue arrows during the break. A couple of nice black arrow trades in there. Now, on the black arrow trades, remember, you're going to risk 10 ticks. You want to make sure you have 10 from here to here. You're going to risk 10 ticks. You want to make sure you have 10 from here to here. Okay? That's what you want to make sure of whenever you take a trade. Another thing to look at, I'll say this again. I said this in the meeting last week. Watch the pullback. Right? The pullback is not deeper than the prior pullback, like this one. If it's not deeper than the prior pullback, like this pullback was not deeper than the prior pullback, that's still a good trade right there. That was actually a trade off the ribbon. You didn't have to wait for the black arrow on that one. This one right here, though, this pulled back much deeper than the prior pullback. This one right here, you probably wouldn't want to take. Right? That's what you're looking at. Right? We'll get into that more when we start the trading here in 7 minutes. On the Russell, we had some decent trades on the Russell today. Here we go. Our first one was right in here. There was our very first trade on the Russell was right here. We had 4 ticks profit on that. The next one that we took was over here. We had another 4 ticks profit. And this one, we had 11 ticks profit. It looks like going from 8 to 19. So we had 11 ticks profit on that one, and this one I didn't write down. So whatever we got on that profit, I didn't write down. And that was, it looks like it. We started the lesson plan, and we didn't trade it again this morning. Well, there are no more blue arrows either. But that was the Russell this morning. Okay. The ES, we had just a couple of trades. Now, I'm sure Dwayne has already said this, but we rolled all the indices. We rolled all the indices, but we also, on the ES, you see how I have this one here, ES1 exclamation, that puts you on the forward contract, the front contract, right? The continuous contract. And I put it on that because my context PP was giving me a little bit of an error because it wasn't finding enough data to work with when I was looking back. So I put it on the continuous contract and that solved that problem. So if you run into that when you roll to a new contract, if it just says error, you can shut it off and put it back on, or just roll to the continuous contract. Okay. Anyway, on the ES, we had 1 trade. It was right there. We picked up 2 ticks, and that was it. That was the only trade that we took, and we had 1 blue arrow right at the open that was right in there. We had 1 pre-market right there. Just not a lot of opportunity on the ES today. Okay. And we do have some big news coming out this week. We have CPI and PPI coming out this week. And CPI is tomorrow, so that's a big deal coming out tomorrow. I thought it was going to be coming out on a Wednesday. It's usually out on a Wednesday. I don't know why they're doing it on Tuesday this month. And they spread it out. They usually do CPI and then PPI the next day. And now they're doing CPI with a day off, or a day in between, and then PPI the day after. So what it costs us for stuff, and then what it costs producers for stuff. And we have some earnings. Maybe that's why they're doing it, because of the earnings that we have coming out this week. All right, so this is the NQ. Now you can see all these blue arrows are triggered here in the pre-market. blue arrows, blue arrows, blue arrows. This one right here was our first trade. We picked up 28 ticks. This is where we got our goal for the day. 28 ticks on that one. And we missed that one, that one, and that one. And we, on this one, we went from 28 to 35. So we had 7 ticks, it looks like, on that one. Then we went from 35 down to 15. So we stopped out on that one. And we went from 15 up to 45. So we got 30 ticks on that, then a break even. Then we stopped out again and went from 45 down to 25. And you see all these blue arrows that were happening in here that I ended up missing a few of them. Then here we got another, went from 25 up to 55, so we got another 30 there. And then the next one that we took, we had a break even. Then on this one, we went from break even, we went from 55 up to 63, so we had 8 ticks on that. Then we went from 63. This is all during the lesson plan here. That's why you don't see any trades happening. We went from 63 up to 71. So there was one trade in here that I missed, and then we stopped out and went from 71 back down to 51. And then we had 4 ticks profit here to get me from 51 up to 55. I believe that's where we ended it. Yeah, you see all this flatness right here at the end of the morning session. There's no sense trading all that, and we didn't. It did break out of it though during the break right here. We had a nice blue arrow trade right there, good for 30 ticks. Another blue arrow right there, good for another 30 ticks if you had it. Blue arrow here that would have stopped you out, and that was it for the blue arrows. All right, so it is now 12:58, and I'm going to post something here in the breeze in a minute. Oh, it's almost 1 o'clock. I'm going to wait until 1 o'clock before I start up the live stream. If you guys have not taken a free trial with us and you want to, go here to mytradingiq.com, sign up for the free trial right here. No credit card required for the trial. If you want access to the spreadsheet, all you have to do is say so, or I will give access to people that are in the webinar right now. I can post this in the webinar. Do copy link, say done. I can post this in the webinar. Anybody that's in here in the chat there. Okay. Some people asked for it this morning, so I thought I would just post it. All right. It is time to start up the stream now. I'm going to do that right now. Okay. So here we are starting up the live stream as we speak there. All right, so as we set up the live stream, we have something happening here. It's got a commodity oversold to give us an arrow on this. It might actually even turn into a blue arrow on the NQ right there. Okay, it's possible it could turn into a blue arrow on that NQ. And there it is, the blue arrow on the NQ. That's what I was talking about. All right, so that is a valid long trade. I'm just looking at it. Here because I have a horrible fill on it. Okay, my fill's all the way up here at 241, and I was looking for a fill here at 39.25. So my stop is 20 ticks away, and it's probably going to stop me out, but it is probably going to end up working out too. Okay, so that did not pan out for me at all yet. Let's see, over here the ES is in a no trade zone, the Russell's in a no trade zone, and the crude oil's changing directions. Okay, so from this blue arrow, the targets are up here at 243, then 249, right next to each other right there. And the next one's all the way up here. Oh, wait a minute, these are 42.75 and then 43 right here. Those two are right next to each other. Okay. Can I share the complete? You can just go, Gina, I pasted it in there, but all you have to do if you want to start fresh, here, I'll show you. So I pasted it in there so you have it. Now, if you do file, make a copy, then you'll have a read-only copy, and all you have to do is highlight this. Just highlight that, and hit the delete button. Like that. It'll make it all go away. Okay, and then you can put your own stuff in. Okay, you'll have to copy this right here, this formula right here. No matter what you do, you'll have to copy that formula in. Okay, what this formula does is it does all the math for all of these here and adds them all together. That's, you know, what the tick value is times whatever the number you have in there plus the dollar per tick. But you can take the spreadsheet that I just gave you the link to and do that. Just make a file, make a copy, and it'll be your read-only, your writable copy then. Okay, and then you can go in there and change whatever you want, and just highlight it and delete it. And then the colors, of course, you can change your own colors right up here. You know, if you want to change colors of the lines. Okay. Again, I gotta hit Control C on that. That's how you do that. Okay. So to make that meeting for John. Now that I think about it, is John in here? I do not see him. Okay. So I stopped out on that one trade right there. I haven't done another one since, but it's had a bounce up right there. It's a big gap up right there. I don't know what happened to it, but I wasn't even looking at it. All right. So on the NQ, we want to pull back up and test the ribbon. On the ES, we want it to bounce off midpoint here and put in higher swings. Now the ES got weak right here. It just stopped putting in higher swings. It was a slow grind, then it stopped. And now the pullback's getting a little bit bigger. If this bar closes down on the ES, I think all the indices are going to turn down right here. What I didn't do this morning was really look at the bigger picture stuff all that much. I rolled everything over this morning. For all the guys who don't know, we rolled to the M contract on all the indices, but I didn't really look at the bigger picture stuff this morning. So I'll just take a quick look at that. Right, so the ES came back, hit the ribbon, and now it's contemplating moving up a little bit more. If you look at this, so in between the weekly trading zones, we're just about to hit the midpoint here, and I think that midpoint is going to act as resistance.
All the indices are in the red.
Yep. On the day, all the indices are in the red. That's what Dwayne just said. For those of you guys in the live stream who did not hear that, on the day, all the indices are going to be in a red, like this. They're going to be a red bar. But right now, it looks like it's going to try to pull up to the midpoint here and then bounce off it again. It did the last time right here. Okay. It's kind of what it looks like it's trying to do again. That's the the Russell. I don't know what midpoint that is at that it's hitting right there, but the midpoint in between the zones is exactly right here at the BBC. So it's probably trying to do that. You see how the black step line crossed in up above the MA1 right there? That indicates the price is trying to get back to the BBC, and it's on its way. The same thing happened over here on the NQ. The BBC has held several times here on the NQ, though. Let me just get rid of these drawing objects. And I'll draw a new one on there. Hey, there was something I wanted to do. I'm going to go do in just a second. Remind me to cover Mr. with the TV trades. Okay. TV trades now means target view trades, guys. Doesn't mean trading view trades anymore. It's target view trades now. Okay. I had to make a change. Let's go look at it right here, not there. Let's go look at it here, up here, and here, and here. And let's look at Mr. MST. Today. So he's loading up at the top. So they must really be thinking this thing is going to pop. All right. Well, I mean, it is popping. It is popping. So they've been absolutely right so far. Really? Well, Kramer starts calling for it, then it's time to sell. But He's consistent, consistently horrible. Well, I mean, no, he's consistent. No, you call it what you want. It is consistency. All right, I just want to publish this in the breeze because these were the Mr. buys today. And I know Steven had posted something a little while ago in the breeze, so I just wanted to add this. So this is using the this is using the TradingView trades, the TV trades. On the 5-minute chart here, you had some awesome buys on the Mister this morning. Okay, this was actually yesterday. This was this morning. This was not yesterday, but Friday, and this was also on Friday, but it didn't give a signal right there. I'm curious why it didn't, but it doesn't really matter. Just get rid of that one. There, do edit, copy. I just want to point that out. It's given some good signals, and if you were just doing it on Ethereum, it was actually leading Bitcoin. It usually doesn't. It usually trails Bitcoin, but today it was leading it. Now this was yesterday. No, it was actually today. Today at 3 o'clock in the morning. The Bitcoin gave the same signal at 3 o'clock in the morning today. All right, and give a couple more in here, smaller ones. They haven't really done anything, but this one here at 3 o'clock in the morning, Bitcoin was the same thing. And if you were to look at it on a little bit bigger time frame, I believe it was over here yesterday, exactly 3 o'clock in the morning. All right, that was still today. Still today. Or I was given the indications. Okay. Oops, I didn't mean to do that. Sorry about that. Back up here. What I meant to do was this. I haven't looked out in the live stream yet. I did start it, I think, right? Let me see. Just want to make sure I did start that. I did start it. Okay, it's been going for 9 minutes and 20 seconds. No questions. Okay. All right, we did have somebody asking some nice questions this morning, so that was good. And where did I want to post that? Oh, here. Breeze. All right. So on the NQ right now, we're going sideways. We don't really have a trade set up in here. We did hit the ribbon, and I gave a shorting opportunity in here, but it's not going to be anything in here. You got to come out of the overbought to get an arrow. And right now, everything's all flattened out. You're in no trades on. No arrows forthcoming on the NQ. Or the ES, or the Russell. Closest thing we have to a trade right now is going to be the crude oil if that pulls back enough. Okay. And on the crude oil, we're pulling back up to test the ribbon. We did test the ribbon here, but it doesn't really matter. On all three of these indices, we tested the ribbon, but it doesn't really matter. Okay. So in this morning's lesson, I had the opportunity to go through how to roll all the contracts. This is on the ES1, ES1 exclamation, which is the front contract. Right. I also showed how to roll them all on NinjaTrader, on DC Pro, and how to do the weekly trading zones on all of them. So all that was in today's lesson plan. That should actually be a pretty good lesson plan. I mean, even if you just take that part of it out and not get into the whole lesson plan part, I think I did all that right at the beginning, the first 10 minutes. It would be good stuff, I think, for people to be able to review in the future. Yeah, it wasn't a lesson plan. So to do that, I'm gonna have to render all those lesson plans, convert them all. All right, so we don't have a single trade here. Does anybody want to see anything? Anybody have any symbols they want to look at? Anybody? I'm happy to look at anything anybody wants to right now. Go back here, and now if we look in here at what we thought was going to happen with all of these things, like the Mister, the Mister just blew away all the estimates that we had, but the Bitcoin, I think we said last week 74,000 is what we were for on the Bitcoin. We're still looking for that up here. I think 74,000 on the Bitcoin is what we're looking for. And let's see on excuse me, sorry. The Ethereum, that has already hit what we thought it was going to do. That's what I was talking about earlier when I said it's leading the Bitcoin this time. Because Bitcoin, we had put basically the leg length stuff that we had established earlier. When we were talking about this last week, and I was doing those Fibonacci projections, figure out stuff where we've never been before. And I just use the price action, which is basically the same thing that Fibonacci projections do. But I just do one little piece of it. Fibonacci projections do a whole range of it. But just the one little piece that I projected here has already happened with Ethereum. It hit it to the tick, and we put that up there last week, on the 5th of March. And it's hit that to the tick now. And so this is where I think it should pull back to. If it doesn't go any higher than this, then this is where I think it should pull back to. Like 3,600. We'll see if it does. The pullbacks haven't happened, and they haven't happened as drastically as I thought they should yet. But we'll see. We'll see if they do or don't as we move forward. Right. So on the NQ now, we want this to pull back up and test the ribbon on the. I'm sorry, I was looking at the crude oil when I said that. On the NQ, it already did pull back and test the ribbon. It gave a down close off the ribbon right here. Now, it didn't give you any kind of an arrow because it didn't come onto the overbought. If it were going to give you an arrow there, it would have been a blue arrow. Now, we haven't had a blue or a green arrow yet, so we can take a blue or a green arrow if we get one. Okay, if we happen to get one. Everything comes together in such a way that it would indicate we should move down some more, and it hasn't done that yet. Then we'll take advantage of that. That is pretty darn close right there, but it's not. All right. Let's see. That is going to do it right there. It didn't come out of the overbought. It did not come out of the overbought, but it did sell off the ribbon right there. Okay, so you're not going to get any kind of an arrow on this, but it's a valid short off the ribbon. And I will show you what that looks like in the lesson plan. Not in the lesson plan, but in the trade rules here in a second. I'm just going to bump my stop to break even. Well, I should have bumped it to break even. I'm going to bump it to break even here when I can. And I should have already hit it once, but I didn't. Now I can hit break even. Okay, so now my stop's at break even, and we should get all the way down below the prior swing. Well, you see the projections down here that it's already given from the last blue arrow short. It's already got these other couple of levels down here that it hasn't hit yet. Now I ended up with a break even on that, but let me show you why I took that trade. Okay, show you why I took that trade, because we didn't get any kind of an arrow. We go here to mytradingiq.com. I should probably say that too for anybody watching in the live stream. If you like what you see and you want to take a free trial, go here to mytradingiq.com, click on the purple button. There is no credit card required for the trial. Clicking here is going to bring you to the registration page right here. Just fill it out. Give us your TradingView login ID right here. Gives you TradingView login ID. We'll be able to enable the indicators for you. That is the only way you're going to get access to the indicators. All right. There's no credit card required. All we ask for is your name, email, and your phone number. What was I going to show you? I was going to show you this. A short was this. A short trade without the slingshot. First of all trades must come after a higher or lower swing, in this case, a lower swing pivot. All trades must be in the long-term trend direction, in this case, bearish, downtrend. And it was a sell without the slingshot. The black line in the ribbon must be on the top and in the red. And the price must touch the ribbon on the pullback. All right, the price must touch the ribbon on the pullback. Right here, the black was in the red and on top, and price did touch the ribbon on the pullback. Now I ended up with a break even on that. It did go further than the break even, but it's come back. It didn't go down and put it in the lower swing, which is what I was thinking it was going to do, hoping it was going to do, but it didn't end up doing it yet. All right, now over here on the Russell, we'll pull back up and we're testing the ribbons. This is 96.7 is a high. Subtract 8 from that. Subtract 8 from that. It's going to be 5.9. 5.9 over there. Now, this is only going to be a short if this comes out of the overbought. All right, if it does not come out of the overbought, it's not a valid trade. I'm thinking it's gonna. It just triggered me in without getting down there yet. I thought it was going to. It doesn't usually do that. Did I do my numbers wrong? I did do the numbers wrong. It's at 96.6. Okay, so that's my fault. I did the math wrong. I had my order in the wrong place. Anyway, I think it's going to close down. It's going to work out. My stop is 10 ticks away. 10 ticks away. So if it stops me out, that's my fault. I put the order in the wrong place. It looks like it's going to. But that would be my fault. It's not, because it didn't work out. It could still, that would be a green arrow. If it gives a down close right here, pulls it out of the overbought, it'd be a green arrow, and I'll probably be in exactly the right place if it does it this time. I'll let it ride, because I think it's going to happen. I think it's going to push down and get down to this level down here, to 94.0. There it is, the green arrow, and that's, now I have a perfect entry, well, almost perfect. So it's a valid entry now. Over here on the ES, we have a similar thing happening right now. The ES has got a high here of 78. It's going to have, I'd be selling 76 on the ES right now. And that one, I am not making a mistake on. 78 down to 76 is correct. Right, the NQ gave us a short trade here. Did not put in a lower swing, and it's gone sideways a little bit, but it's doing a pullback before another bigger leg down, I think. So all the indices should be pushing down right now, I would think. I don't know. I think they all were anyway, coming off the midpoints, the VBCs, I think. The bigger picture stuff we looked at. Nope, we just stopped out on the Russell. We never got the ES, and we just stopped out on the Russell. So close. All right. What time is it? 1:19. So we have 11 minutes left in this session. John B, are you in yet? No, he's not. Well, he might be. No. All right. So if anybody has any questions, all you have to do is ask. Hey, that was what I just showed a minute ago on TV Trades. Let's see that. Yeah, they're twice today. All right. So yeah, for everybody that's in here that was not in the morning session, I have been coerced into renaming TradingView trades to TargetView trades. So it's still TV trades, but now it's TargetView trades. TargetView trades. All right, still TV trades to all of you guys. Still TradingView trades website. I'm having the TargetView trades website built out right now. I bought the domain, but the website's not complete. But you can still go to TradingView trades right now if you want to do any research on it. But it's going to take a week or so to get to the website built. Michael, Google didn't like it. It was too close to TradingView.com. TradingView Trades was too close to TradingView. So rather than fight it, I kind of had a feeling. I thought TradingView was going to be the one that was going to be annoyed with it, but I was kind of ready for it, except I didn't have the other website built all the way out. I did buy the domain TV Trades, and I knew it worked for both. So that part of it was okay. But Google suspended the account, and I just don't feel like dealing with it. All right, there's a long hair off the ribbon. I just got 36 profit on the long off the ribbon right there. Sorry, it was from right here. The same trade that I stopped out on a minute ago. Somewhere over here. It was going in the opposite direction over here though. That was a ribbon trade right here. And the reason that was a trade, let me show you. The reason that was a trade, this one was a long trade without the slingshot. In this case, the black line and ribbon must be on the bottom and in the green, whereas the last time it was must be on top and in the red, this time on the bottom and in the green, and price must touch the ribbon on the pullback, which it did right there. So I got to break even on this one back here. I stopped out on this one. This actually gave the green arrow. This one here was just a ribbon trade at the bottom for 30 ticks. Okay. But for all of you guys who are already using TV trades, there's no change at all. You don't have to worry about a thing. And for anybody that signs up right now, you can still go to TradingView Trades. You can still go to tvtrades.com. That's going to bring you to TradingViewTrades.com. The name change is mostly in the back end. You know, all the Google stuff, what that looks at, and all that kind of stuff. Okay, and the web page, of course. But once I get the other web page built out, it's going to be a little more attractive than the TradingView Trades one. Doing it a different way. Okay. Let's see. But yes, on Friday they suspended my Google AdWords account. And they make you jump through like a million hoops to get it unsuspended. If you ever do, they make you jump through a million hoops to do it. So it's okay. There's no sense fighting it when they have an easy solution. NQ here. Now that it's got the target matrix, it actually makes more sense. Target view trades makes more sense than trading view trades. Like I said earlier, it's like there was some hand guiding me. Some overwhelming force. Some higher power. All right, so I was waiting for another bounce off the ribbon right here, and we didn't get it on the NQ. And we have about 5 minutes left in here, 4 minutes now, 4.5 minutes, something like that. We could get another trade on the NQ. It's possible we could get another trade on the NQ. Looks like we're not going to get anything on the crude. The Russell came out of the no trade zone. If it does pull back right here without going up further, then the outer bands are going to be really close together. So that's what I'm kind of waiting on here to see what's going to happen with that. And this is kind of jammed up there. And this is Ethereum. That's not really set up and work with either. A second. Cody. I'm surprised. All right, and you guys using the TV trades? Paying attention to any of it? Because it's always great. You know, if you look at anything over here in this list, PLTR, that was one that I think in my meeting, with Ronnie yesterday, I believe. It was yesterday. He was trying to come up with, and PLTR had a nice buy rate back here, the 26th of February. This is on a 30-minute chart, but you know, not everything is good for a 30-minute chart. If you break this down, it's only $23. You can do this on a quarter bar. Every bar is a quarter, and you're not going to be shorting it, so we'll get rid of the shorts. Okay, get rid of that. Okay, so it gave today. It only gave one little long trade right here that really didn't go anywhere. And this was on the 6th of March, so I guess it doesn't move around all that much. On the 6th of March, it gave a decent trade. Look at Tesla. And Tesla on a quarter bar. Tesla's a little too big for a quarter bar. You probably want to put that on a 50-cent bar. Okay, put it on a 50 range. And on the 50 range, well, it's recently given a long trade back here. That would have had a stop down here. And that's still functioning. It gave a long trade here. Was that today? I gave a long trade this morning. Tesla gave a long trade here at 176.12. That ran up $7. And it's got a long trade going right now. But you can use this on anything. Netflix. Netflix. I'm just randomly choosing things on here. That gave a long trade. This is on what? A 50 range. So it gave a long trade back here a little while ago. That really didn't go anywhere. It gave one here a little before that. That went a couple of bucks. Gave one here this morning. Actually didn't get one there. Gave one here this morning. That started here at 606.88 and it ran up $5 from there. And like the very first one it gave, actually today that was the very first one, I guess. It gave one here, close the business on Friday. So that's Tesla. And Apple. I don't know what Apple's doing right now. I know it's been beat up pretty bad lately. Let's see if we have anything on the long side today. $1.66 on the day. Okay, and we had today on the 11th, we had one long trade right here, 173.34, and that ran up to 174.38. So that was it for today on the Apple. What time is it? It's time to wrap it up. Okay, so let me just shut all this down for a second and we'll go back here. This is TV trades, by the way. And all passport holders get access to it right now. If you sign up as a passport holder, you get access to that right now. Anyway, in here, we don't have any more trades and it's time to wrap it up for the morning session. So in the morning session today, I think we had a stop out, a break even, and a 30-tick target. I believe that's what we had all together. If you have not taken a free trial with us, let me just say that one more time. If you've not taken a free trial with us, go here to mytradingiq.com. Click on the purple button right here, sign up for the free trial. Right, there's no credit card. Sign up for the free trials. Can bring it to this registration page. Make sure you give us your TradingView login ID. If you have a Ninja Trading, give us your Ninja Machine ID too. But give us your TradingView login ID, and then that's it. You'll be sent everything you need to get into the room in the morning. Okay. Right, and with that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep, I am. Recap of the morning session.
Today, it took one trade and 13 minutes to get to $2,135.
Good job. Okay. We left off, guys, on this recap we were doing the ES. Now, I talked about how red and falling had turned to blue and climbing. So there was a good chance we would overcome the BBC, potentially overcome this zone from last week. So now you've got to pay attention to this swing high right here. 51.90 is potential resistance. Above that, 51.96 is potential resistance. Above that, 52.15, no, I'm sorry, 52.18. And then where we had the bearish cross, where the red line got below the green line, 52.22. Now remember, over here, the bullish cross that led to the extended move, first time price revisited that area, literally to the tick. Good support. So if price can overcome this obstacle, this obstacle, this obstacle, and this obstacle right here, then you'll be looking at a bearish cross. And just like the bullish cross, when price returns, becomes good support, on a bearish cross, when price returns, good resistance. At least the first time down or up. If it continues to try, it may eventually break through that area, and often does. Okay? That's a hidden area that most people will not be expecting resistance necessarily in that area, nor were they expecting support in this area. But our traders were, because they've been taught to watch for that. On the Dow, here's where we opened last night, below the BBC. Remember, below the BBC, we're looking for short trades. We're bearish. BBC, bull bear cross. Price crosses above the green line, bullish, anticipate higher prices. Price crosses below the green line, we're bearish and anticipate lower prices. Here's where we opened last night. We're below the BBC and we have red and falling. So it takes us down to the zone. We consolidate. We find support at the zone. When the market finds support, it will go look for resistance. Pull back to the BBC. Pulls more often than it doesn't. So the market found support here, but sent it looking for resistance. It found resistance here, so now it's going to go look for support. And it found it at this previous swing low. And we got just a small pop-up, and then we took that out. Okay. Came down to this area, right here, where this candle opened. Okay. This candle right here, back on Friday, opened right there. There it is right there. Support sending us to resistance. Resistance sending us to and through the target to the zone. Now this bullish crossway back over here, as you can see, that's what led to this whole huge move up. It's really important to watch that. We're about to get a bullish cross right here. Blue line, price continues higher, the blue line will cross over the green line, bullish cross. So the first time price comes back to that area, you'll expect support. However, on this move up, we overcame just barely that swing high. We did not overcome this swing high. That's a sign of weakness in the market. And just above, we have a bearish cross. So we may see a retracement now. If price can get below the step line, we'll have a pullback to the BBC. Right now, that's support times 2. Blue and climbing, good support. And of course, the pullback to the VBC holds more often than not, as it did here, 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 even here. Even though we spiked it when the 30-minute candle closed, we were back below the VBC. Okay, so now price retraces to the VBC, and we'll have a long opportunity up to here, to here. But you've got to watch this area here, okay? So that's most likely going to be good resistance if price can get there. The fact that price crumbled so quickly after taking out this high, okay, it's a sign of weakness. But at this point, we still expect the pullback to hold until proven otherwise. See, sometimes price will spike VBC, but by the time the 30-minute candle closes, here, and we get another leg up. But this was a sign of weakness because we failed to take out the previous swing high. And that took us down to here, which is what? A bearish cross. Okay? So what do you do right now? Nothing. Let price get above that bearish cross, or let the pullback fail and then short back down to this area here. Got to get below this area right here. And you've got this window of opportunity here. You got a window here. You have a window up here. Patience and discipline. On the Russell, so we opened last night below the BBC, the first 30-minute candle. Found support where? Right where that candle opened on Friday. Support sent us to resistance at the BBC. Resistance sent us again looking for support. The zone was 2100/2101. So we missed it by, it looks like 3 ticks. Support. Resistance. Resistance sending us back to support. Now we hit the zone from last week. We got a nice bounce, but it didn't stick. This was a green candle all the way up. Then it collapsed and closed as a red candle below the short target. And you can see the bearish cross. So, whether it takes a day, a week, a month, or a year, when price gets back to this area, expect resistance the first time up. Price just pulled up the last week's zone. It's traded through the step line. Red and falling is directly below price. That can become good support. If we trade through the step line, then you've got potential support here, here. Last week's zones, 87, 88. Of course, all members and trial members have this week's zones already. They got them this morning at 6:15 a.m. Eastern. Oh, and for those of you who are using DT Pro charts, you'll notice when I hover over a candle, if you look down at the bottom, it tells you that's the 1:30 candle, 13:30. Okay. If you don't know how to read military time, just subtract 12. That makes it real easy. Okay. So, on your DT Pro chart, up here, click that. Make sure it says current profile. It can say a number of things, but you want current profile. And then scroll down where it says time zone, put in UTC4. That's if you want your charts to reflect New York time. That's how I set my charts up years ago to reflect East Coast time because we have traders around the globe. So we had to have something that everyone could relate to and understand. So even though I'm in Phoenix, I talk about the show. It's from this afternoon broadcast. It's from 12 to 2 p.m. Eastern. This time of year, because of the time change this past weekend, it's now my time. It's 9 a.m. to 11 a.m. The market opens at 6:30 a.m. my time, and for everybody on the West Coast. So I'm on West Coast time now till October, when we come off daylight savings time. There's a bill pending in Congress to make daylight savings time permanent. Hasn't passed as of yet. I don't know if it's still up for debate or if they've moved on. I see price is trying to get through, red and falling here. On the way down, red and falling is your friend. See, this is the perfect stack. Price, step line, red and falling, BBC. Okay? But once that step line crosses red and falling, that's when you expect a retracement back to the BBC. When red and falling hooks underneath price like it's doing right now, that's because it's trying to turn to blue and climbing, which is bullish. This is bearish. This turns blue, that'll be bullish. Okay, just like we were looking at on here on the YM. See, it's turned blue and climbing. On the ES, it's turned to blue and climbing. So here you have conflict. You got resistance right overhead, support right below. Our price is always trying to do one of two things: break the previous swing high or the previous swing low. So we've covered the ES, the YM, the Russell, NQ. Here's where we opened last night, dropped to the zone, just consolidated for hours. We did make a drop here, hit the short target. You only need 10 ticks. Now with the logic alerts, there's an entry price and then the initial target. That's designed to help you get your goal for the day. On every market, that's $100 per contract traded. The exception of the NQ, it's $200 per contract traded. 10 points times $20 a point, $200 per contract traded. So from support, we go to resistance. Resistance sends us to support, back to resistance, back to support, back to resistance, over and over, again and again. On the NQ, you can see we've got blue and climbing. Price may have different ideas. Okay. Remember, it's the institutional traders that move price. Let's glance back at our daily. We're still sitting, big picture, right on top of this 62% fib extension. Resistance on the way up, support on the way down. Okay, crude oil. Here's where we opened last night, below the BBC. We dropped to and through the target. If you go left, you'll see why price stopped where it did. There's always a reason. Support sends us to resistance at the zone. Resistance sends us to support at the zone. Support sends us to resistance at the zone. Now remember, these zones were published not this morning at 6:15 a.m. Eastern. They were published last Monday at 6:15 a.m. Eastern. And a week later, we're still doing the job. And the reason I have last week's zones on my chart is because all alerts that go out on Sunday night are based on the previous week's zones. Members and trial members get the new zones Monday morning, 6:15 a.m. Eastern. Publish the zones weekly since December 14th of 2009. Once you understand how price behaves at a weekly trading zone, they will become one of the most important tools in your trading toolbox. So we hit the short target and we hit the short target. We've got red candles coming down to the BBC. If the pullback holds and we catch a bounce, then we're going to get a bullish cross, which means this area will then become good support on the way back down. If price trades through, then blue and climbing is going to roll over, just like it did here, and become red and falling. Gold. Gold made a half-hearted attempt to get to the long target last night. It didn't. It has spent the majority of the session just consolidating at this weekly zone, 2185/86 from last week. Not much to talk about there. Silver. We had a gap higher open last night. And right here, this candle closed the gap. Got supported blue and climbing, pushed us higher, but not high enough to reach this high from Friday. Go down to the short target, support, consolidate at the BBC, and we finally get a decent leg and a retracement and a leg. Where does that leg take us? Just shy of the high put in on Friday. Sign of weakness. So back we come to the BBC. Now this was a huge red candle all the way down. But by the time the 30-minute candle closed, look how much the story has changed. It went from being ultra bearish to ultra bullish in 30 minutes. And we never made it to Friday's high. Tried here, here, and here. The step line has now crossed blue and climbing. So price will most likely pull back to the BBC. Pullback holds more often than not. If it doesn't hold, let price get below this low, and you've got a very nice window of opportunity here. Okay, you only need 2 pennies in silver to get your goal for the day. That's it. Price goes from 24.63 to 24.65. That's 2 pennies. It's $100 per contract traded. Now, silver does have higher margins, and it can be volatile. And if you're brand new to trading, probably better to pick a more sedate market, one that has lower day trading margins. But once you get your sea legs, then you can see it's a very tradable market. So we know where it's headed. So why aren't we shorting it? All right, let's take a look at the euro. No, hang on one second. All right, sorry about that. So price pulled up, didn't quite make it all the way to the BBC. That's a sign of weakness. But red and falling, as you can see, is hooked underneath, directly below price. So that's potential support. Gets through there. We have support here. this is last week's zone. This is the euro. We spent most of the night and early morning just rolling sideways. Okay. Now remember, we've rolled the indices to the M contract, June. Both contracts still have enough volume to be tradable, but we didn't want to get caught in the situation we got caught in last rollover when the volume in the new contract shifted on a Tuesday to become greater than the volume in the previous contract. I've not seen that happen since I started trading futures in 2005. But it looked, based upon the volume profile last night and on Friday, that it was going to come early again this time, so we just went ahead and rolled. So if you still want to trade the H contract, you're welcome to. And that brings us back to the data. This picture has not changed much since the beginning of the broadcast. To become a member, go to mytradingiq.com. If you have any questions, call us at 949-42-EMINI. Send an email to support@cfrn.net. 9 out of 10 new traders fail because they don't have someone to teach them how to trade. Whatever career path you choose, you already know you're going to have to go to some kind of school, get some kind of training, get some kind of certification, but not trading. Nope. They will let you put money in an account with no education whatsoever. No tests you have to pass. And let you lose all your money. It almost seems like a crime, doesn't it? It's part of why so many new traders fail, because there's such a low barrier to entry that leads one to expect, well, it must be simple. It must be easy, when nothing could be further from the truth. Trading's not easy, but it can be simple if you have someone to teach you how to do the job. That's why we have a live training room, 2 hours every trading day. Our passport holders enjoy one-on-one private mentoring. Strategy you learn, the indicators you own for life as a passport holder, are fluid across all markets, all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. Never-ending cycle. As a passport holder, you also receive the Logic 247 alerts, the concierge trade alerts. You're able to attend the Thursday night members-only workshop. It's your all-access pass to everything we do, everything we've ever done. mytradingiq.com. If you don't hire us to teach you, hire somebody. I'm not saying you can't figure it out on your own. Maybe you can. But how much time and how much treasure have you wasted already? And how much time and how much treasure do you have left? That's important. Let's wrap it up with our good word for the day. We started out on Friday with the art of being a sheep. Today, part 2. And we talked about sheep. I'm surprised PETA didn't complain. Sheep are dirty, smelly. They fall down, can't get back on their own feet. They need the shepherd to help them. They have been called the dumbest animal on the planet. I don't know that that's true, but maybe it is. And what I do know is that's what Jesus chose to call us, sheep. He said, the sheep know my voice. He's God. I'm not. Psalm 23, verse 1. Lord is my shepherd. I lack nothing. Here's two things we need to know. Number one, character of our shepherd. Jesus distinguished good shepherds from bad ones. In John chapter 10, verses 11 through 16. Bad shepherds look out for their own interests, not the welfare of the sheep. They're unreliable. When a threat arises, they abandon the flock. Now, this is the difference between someone who owns the flock and a hired hand who's been hired to tend the flock. You see, the hired hand, because those aren't his sheep. How far is he going to go? Is he going to put his life on the line to protect one of those sheep? No. If he's a godly hired hand, maybe, perhaps. But what I want you to grasp is the difference in the mindset. And if you've given your heart to God, then yes, you're a sheep, but you're dealing directly with the owner, not a hired hand. I would much rather have the owner of the flock watching over me as a sheep than a hired hand. When a threat arises, the hired hand will often abandon the flock. But Jesus claimed, I am the good shepherd. What makes him good? Well, it's right there in John 10:11. The good shepherd gives his life for the sheep. Their needs and their security come before his own. And if necessary, he will die for them. John 10:14. I am the good shepherd. I know my sheep, and my sheep know me. Jesus knows each of his sheep individually and desires an intimate relationship with them. He calls each one by name. They trust him and follow where he leads. It's in John 10:23. You can rely on your shepherd to protect and guide you. Number two, the sheep's condition is the shepherd's business. He can't be a good shepherd if his sheep's needs aren't being met. Sheep don't know the path to the pasture, the location of the watering hole, or the strategy for their own safety. But the shepherd does. His sheep believe in him, rely on him, and follow him. But believing in and relying on his protection and provision isn't instinctive. It's the only decision you make, an act of your will. Regardless of your feelings or circumstances, you can make up your mind to trust the shepherd to handle things and act as your security. When you turn your worries and concerns over to him and rest in his goodness, he fulfills his promise that you will lack nothing. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.